Recording, and just let everybody know I'm on going voice. All right, 4 minutes left before the market opens. It is March 20th, 2022. It's my birthday on Tuesday, so I don't think I'll be trading on Tuesday. Maybe, maybe not. Who knows? Depends on. Right now, I just have one position open. That's just in Roku. We'll talk about the current setup we have going into this bearish week. Okay, I think we're gonna have a bearish week starting on Tuesday. But let's go ahead and just wait a couple of minutes. 3 minutes left before the futures opens. And one of the reasons why we kind of start our trading week on a Sunday is because the futures opens on Sunday, right? And until 4 a.m. Oh, thank you very much. Until the markets open, we can't really, between Friday night after the market closes till Sunday 6 p.m. Eastern time, you're just guessing about where prices are moving, right? You can't really make a good, things can happen overnight, over the weekend, like a war can break out or something positive develops, and you could be on a bearish or bullish side, and your whole assumption while you're doing all these chart updates during Saturday night, Saturday morning, these are the probably most precious days of the weekend, to spend with your friends and family. You don't want to be spending that time with these charts, right? Everything is so manipulated in the market. You have geopolitical tensions. You have all these YouTubers talking about their assumptions, and no one knows who's right or wrong, especially on a Saturday. Okay, Saturday is like, I don't even think people who go to war are working on Saturday. They're just probably drinking coffee, just waiting for the next instruction set. So I highly recommend not to look at any charts on a Friday night or a Saturday. But when it comes to Sunday, then you can spend the whole entire night, right around 6 p.m. Eastern time. You can spend the whole entire night trying to plan for the trading week, right? Because now you have actual futures data moving, right? The markets are open, and you can kind of get a feel and sense of where it opens at the beginning on the Sunday at 6 p.m. Eastern time. But when it's not open, then why are you, if the whole market's closed, especially futures are closed, why would you look at charts, right? It doesn't make any sense. So it's probably better just when you look at charts, best to look at the charts when the futures open on Sunday at 6 o'clock p.m. Not on a Saturday, Friday, not after Friday. Friday at 4 p.m. Eastern time, you're done. You don't look at charts. You don't go on Twitter. You don't do anything. Friday to Saturday, you spend time with your friends and family. Go treat them out for a nice dinner. And then Sunday at 6 o'clock p.m. Eastern time, that's when you start using your brain power and looking through all these charts, making assumptions while the futures are open. Okay, when the futures are open, that's when you're open. When the futures are closed, that's when you're closed. All right, so we got about 10 seconds left. So let's see how the futures opens, and we can see it's a little extended. I wouldn't be surprised to see a little pull back here. Okay, and yeah, that's not a very bad open. And how can you tell it's not a bad open? Because it didn't gap down. It's kind of just open flat. And let's go ahead and take a look at. I don't have the trading view real-time data. I use Thinkorswim. Let me just take a look at server 104. Oh man. So this is right, there you go. So we're looking at the market internals now. And yeah, it seems like where the NASDAQ did a BLT right to the 50-day moving average. And the position of the BLT now, well, it's completed right here at 4,473 or 4,424. It's right there, and we're extremely extended from that 6-day moving average that now at 13,910. So it's going to be a little bit of a I mean, the risk and reward when you look at a chart like this on NASDAQ and the 6-day moving average way down here, you're not really looking to put on a full position size, right? You're not going to be putting your whole entire life savings. Maybe down here you could have, let's just speak in a in terms of buying the dip here. You could have considered something, an aggressive position here, because it's pretty making a double bottom with the previous low here. But now when you look at where we are after the FOMC pump, the risk and reward is going to be against you, right? So you still want to be long, but you don't want to be fully long. And as for the futures for the VIX on that bearish wolf wave that I talked about, we were assuming that it was going to actually move up to the magenta line, and if it did, we were going to buy calls, right? But that did not happen. So the principles that I talked about in the ideal trade setup, which I'll be starting to do again, conducting these courses. I go through five to six courses. One of them is called the ideal trade setup, and the first assumption is to always, or not always, but 80% of the time you want to be bullish, okay? And 20% of the time you want to be bearish. We have had a really bullish week from FOMC, which is kind of counterintuitive based on all the previous FOMC events we've seen from Jay Powell. Usually dumps, but in this case it actually ripped quite a lot. Surprisingly, but yeah, you don't want to be bearish most of the time. You try to figure out how to stay bullish. And right now, some people are probably bearish, right? They have a little bit of a using their intuition. How could the NASDAQ move up so much? It's time for a pullback. These assumptions are valid. I mean, I'm not going to argue against that, but if you think it's going to go down, then you still have to figure out like how much money you're going to be risking. You can also do the opposite. You can wait for the pullback, right, to the 6-day moving average and load up. Otherwise, if you think you are like an elite trader, you can trade both the puts and calls simultaneously, then yeah, you could do that too. I don't recommend that. The VIX here, based on the bearish wolf wave on the daily time frame, still has a target. It looks like it achieved the first objective here at 24, and there's actually a second bear target at 19, and I believe there's a gap that's still open at 17. So I'm not saying that the NASDAQ could trade a lot higher from here, like move another 4 or 5%. I think that if the NASDAQ just trades slightly in the green, you can still have a lot of those growth stocks move like 4 or 5% in a day, whereas Apple probably won't be moving that much relatively, since it's a very large cap company. So it would need a little bit more reason. I think maybe there's like an Apple event coming up that might push it up another couple of percent. Okay, so it does look like the bearish wolf wave for the VIX futures is continuing the trend lower. So I would just recommend just staying more bullish than bearish. Look for some nice gap downs if we get it on Monday and Tuesday. I don't think we will, but it could happen. But when we look at the TTM squeeze, we have it was scanning on the A6, and now we're in cycle 1. So we should technically have about 2 to 3 cycles higher from here. So either Monday or Tuesday, we should get a nice pop and then a pullback that might start to roll over. Okay, so Monday could be very bullish and then push the NASDAQ up 1 or 2% and then pull right back at the end of the day and maybe roll over into Tuesday. I don't know, but we're in cycle 1 right now, so we should have a couple more cycles left for some good bullish trades before the trend starts to lose momentum and then roll. And I expect it to roll maybe on Tuesday after 10:30 a.m. Eastern time. When we look at the trend did show 1.5. That means that there's a probability of the market moving higher on Monday and Tuesday. So that's something that you want to keep in mind. But right now it looks like futures are trading flat. And when we look at the radar, yeah, it really doesn't look like anything that's happening right now. It's just flat. S&P is still scanning on the radar, A6. Bitcoin looks like there's a big move coming. So that A6 is a huge deal. I think Bitcoin will probably drop 10 to 15% off this A6. Because the reason why I think like that is because you can see that the trend for Bitcoin is forming this bear flag. So that's the bear flag. It's this pole, right? That's the pole. And then you have, I don't think there's any correlation. I'm just bringing up Bitcoin because it's just right there. I can see the A6. And just knowing the concept of what an A6 is useful for a lot of people. So that's a bear flag. And the magnitude of the move from here to here is 33%. So I wouldn't be surprised to see a 33% drop from here to here, which would be around 20, probably around 27,000 to maybe even overshoot to on sub 20. You think there's a correlation between DXY? It should go same just like gold and the dollar. They're inversely correlated. I don't know what the correlation is, how high it is between BTC, but I would definitely believe that they're inversely correlated. All right, so that A6 on the Bitcoin, if you are invested in Bitcoin, I don't know. It could be another buying opportunity, but realistically, you got to be honest with yourself. It's the investment of the century is over, and I think it looks like it's just one big opportunity cost degenerate type of trade. It just doesn't have anything that I don't understand it, but I'm not. The investment was already done. So if you're an investor and you're a hodler, then back in 2015, geez, that's 2015. That's when you could have bought it for like $200. That was the time, and now you're at 41,000, reached up to 68. Some people are saying 100,000. Some people are saying 1 million. It kind of reminds me of those people like Peter Schiff, these gold bugs, or people who keep on calling that gold's going to go to 10,000. I've seen these videos for almost 15 years. Gold has never reached $10,000 or $1 million, whatever they keep on. So it's going to be, I think Bitcoin is going to be, I think technically the next digital gold. It's just going to be a store of wealth, but it's really not doing, it's going to move just like gold. So people are going to call out tops, $1 million, 100,000. And yeah, decentralized currency is a great idea, but actually you have to understand why we pay taxes. The reason why we pay taxes, one of the main reasons is that we have to contribute, for the military in case we get like a Putin trying to invade the United States. Then if you didn't pay your taxes, then how is the state's going to use that money to invest in the military? So you need to pay your taxes to support all the the U.S. soldiers who dedicated their life for freedom, right? And that's why when you go to the States, like a lot of my friends who are serving, they get special treatment. Wherever we go, they have their card where they get tax. They get discounted on the taxes, especially when they go to special stores that recognize that card. They get a lot of privilege because of their service. Whereas in other countries, yeah, I mean, they probably don't pay taxes, and the government's trying to figure out how to make the people who live in that country pay the taxes so they can protect the country, but no one's really paying the taxes and they can't afford anything. So then you're probably asking for donations from other countries. Hey, send over some fighter jets. We need them. We need some military aid here because this is what it is, and we don't have any money to invest in the military. And yeah, that's why we pay taxes. One of the main reasons you pay taxes is for that freedom. Freedom is not free, right? Even though it sounds like it should be free. So Bitcoin is, I don't know, Bitcoin goes higher or lower. Doesn't look like it's showing anything that's bullish. Of course, it could rip up higher. It could go lower. I just don't think it's really there's any compelling reason for anyone to be investing in Bitcoin. I guess the compelling reason would be back here, right? But now, I think it's over. I guess it's something you can talk about during dinner, but I'm sure whoever joins you for dinner they're probably going to stop talking to you after that dinner for a very long time. Okay, so let's take a look at the S&P first. And I got some allergies because it's spring. I should probably take some Reactin, but let me just get this over with here. I think last week on Monday I was looking for the gap down right on here, okay, on that third red candle. I was looking for the sell-off. It did not happen, right? And the worst thing you could have done was buy puts. Because I'm mainly bullish the market, I want to buy the dip, but that did not happen. And on a Wednesday, it ripped up higher, and it ripped up higher 4 days in a row. If you actually look at a lot of these moves here, you get like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And the average move is about 3 or 4 green candles. The largest we've seen here, I think, is 12 continuous. So we are on the fourth candle from Friday, and now on the 5th. And does this move up another, 2-3%? And it might. Definitely, especially if there's a 7-8 minute TTM squeeze, which kind of triggered here. It could move higher, and the A6, the S&P still has an A6, so wouldn't be surprised to see it go up to this level here, 4,584, or if we assume that this is wave 1, because this is a low, right? So then using the Fibonacci extension, taking that low, and then that's the high, pulling it back. Then the 1272 extension is 4,503. So right around here, that would be a very, very strong level of resistance that could trade sideways or pull back to the 6-day moving average and then move up to the 1618, mainly because I think we are in this Elliott wave pattern. This is 1, that's 2 right here. So it was a complicated 2, right? Look at that. So that's if I told you that was a wave 2 and then we're in the beginning of wave 1, I would definitely think we're in the beginning of a wave 3. I would definitely think that this green candle would would be enough price and volume to start the wave 3. But that's not the case. What happened is wave 3 is over here now, because wave 3 wave 2 was here. And that's described in the wave 3 documentation, where you get, this could be a wave 3, right? Because you think it's gonna, you think you caught the wave 2 here, and then it gives you this head fake, but then actually wave 2 started right here, right? So it's kind of like what we're seeing in this. This is the wave 2, that assumption, and then we get the fake out, and then it pulls back, and now we're in a wave 3. This is the wave 3, and based on that, on this, we have a breakout level right there, right? So that breakout level was already taken out on Friday. That's right around here. Correct? So we're breaking out on a wave 3. And then we have A6 here on the Squeeze Pro. We have A6 scanning on the S&P. So I think the third wave breakout is likely to develop into Monday and Tuesday. So you might say, well, what do we do with this big gap, this extended position of the price and the 6-day moving average? Well, you just stick with your strategy, or you manage your risk. You don't want to be holding the full opening of a brand new position here. You should have opened it up a while ago, okay, or day traded, whatever you could. So I think the wave 3 will probably extend to at least the 1272, and possibly move up to the 1618, because we're now in earnings. And then wave 4 will this is the tricky part. Is it wave 4 going to bounce from here, or is it going to bounce from here? Because we're in this is technically another catching the falling knife. This price will start to pull back as it creates a wave 4 structure, right? And we don't know how low it's going to go. So that's the, and if it's truly a wave 135, then wave 4 cannot enter into wave 1 territory. That's 4,400. So we'll talk about that when that happens. Right now we're in a wave 3, and we want to know how high this wave 3 goes. And there is a good chance that wave 3 just goes straight like that, but I would be more realistic. It's probably going to be like here, max. Okay, and then wave 5 will be like that. And I don't know, that would be a new 52-week high. So there's actually, believe it or not, we could be setting up a new 52-week high in the SPY, which would be crazy, right? Because that's the S&P pulled back, corrected about 14%, and it actually left the gap open. And I still think the gap is going to get filled. I just don't know when. Okay. And I've removed any idea of a gap filling anytime soon, the 4,000 gap, until the VIX starts to trade in the green. Okay, if risk is off, then I guess the next leg down is going to try to take out that 4,000 gap. So if the S&P doesn't take out this level here, if we're in a wave 3 and it pulls back on wave 4, and wave 4 we get bad news coming from from whatever the bad news is. I don't know what it will be. I think the Ukraine taking over Kyiv, whatever, that could be good news. The interest rates will be bad news. And if the interest rate talks, inflation talks persist in the market, then this wave 4 structure could invalidate wave 1 and then just dump all the way down to 4,000. Okay, and then you get a brand new wave 1 setup this wave 5 is done. So this is gone. Right? So we get a pump to one of these extensions, 1272 or the 1618, and then the pullback, that's wave 4. And I guess how it pulls back will give us some clues, especially with the VIX, on how when the wave 5 is going to begin. And if wave 5 begins, the probability of a new 52-week high increases significantly. So I'm not too sure, when that gap in the S&P is going to fill. But if it's going to fill starting at around 4,614 on that wave 4 structure lower. Okay, that wave 4 might be the wave that invalidates wave 1 and then pushes lower to fill that gap. And then you get, what happens after that is you get a new wave 1, right? So all this is gone. And then once it fills here, you get your wave 1 again. 2, 3, 4, 5, right? This would be the assumption if wave 4 invalidates wave 1 currently, because we're currently here. Wave 1, 2, and 3, 4, 5. Okay, so we're in a wave 3. But once wave 3 hits resistance, you'll get that pullback. And if wave 4 invalidates that level right there, then it's going to go drop all the way down here. And then you reset your count to wave 1, 2, 3, 4, 5. So you'll get another one of these massive moves sometime in the future. So that would be great if we get that gap fill again, because then we can set up another. This time we'll just try to catch the next ET. This was an ET on the S&P. Okay, futures are still flat, which is good. And let's go ahead and take a look at our beloved Tesla. So I don't have a trade in Tesla, and a position in Tesla. I did trade it on Friday live with everybody, and it was exactly how it played out, using the TTM squeeze and watching the VIX collapse, because I remembered that the VIX was trading at plus 2.38%. Okay, that meant risk was off, but we put it on because we saw that the bearish wolf wave on the VIX was our edge, and we also had a trend that hit, I think, over 2 on Friday or Thursday, right? Yeah, hit 1.7. And then we had the NASDAQ that looked like it was going to set up for a BLT, but it could also have pulled back to the 6-day moving average. So we exercised our assumption number 1, that we were going to remain bullish, okay? And that's what we did. We remained bullish, opened some positions in Tesla on the weeklies, and also we had the 950 calls for next week that went from $2 to $10, and closed them all out because, well, even though the TGIF triggered, Tesla's moved up to its objective here. That's the 50-day moving average. After the 50-day moving average, I don't know exactly where it's going to go, right? And that's the wave 1, 2, 3, right? So where is 3 going to end? And then 4 and 5, right? So using the same idea with a Fibonacci extension, take your 1, pull it back, and you got your 1272. So if we're lucky and get some sort of dip on Tesla, then a little dip in Tesla, like those 950s are pretty much too expensive to buy, because now they're worth like $13, $11. So I don't know exactly which contract I would get to catch this 944 move. So, that's it. Could end up becoming a doji on this day, because it's trying to build enough momentum to break out, and I think that would require a doji day. So these are look at the average move we talked about in Tesla. Tesla makes an average move around 4.5%. Each one of these candles are actually 4.5% approximately. So you can get an idea of the average move that Tesla makes per day. So then a 4% move from the close on Friday to here would take us slightly above 945. And so if you can catch a 1% drop or a 2% dip on Tesla in the morning, if it does, then you might have a good shot to get it up to about 950 on Tuesday. Yeah, probably priced in. I think the news, everyone knows. I think everyone knows about that event, and Tesla does have an A6. So if we get lucky on a doji on Monday, it's made a huge move, and usually after a big move like this, you get a doji like this. Huh? So I would just wait, like not get too. 750R is long Tesla, but I would, and 750R is not going to. I don't think it's going to close out Tesla. I think it's going to be able to hang in there on that doji, and if Monday ends up becoming a doji, then. And depending on how I manage my risk on Roku, I might actually get into Tesla 10 seconds into close on Monday. And with that being said, we also know that there's a huge gap at the $1,200 mark right there. And that is 1,216. So this is going to be, I think there's really a huge money making opportunity in Tesla, especially TGIF. Okay, especially if we get into a wave 5 on the S&P. Huge opportunity to make a lot of money on the TGIFs. Okay. So lots of upside room for Tesla to move up to 1,220 and make a new 52-week high. And actually, if we take a look at the weekly chart, it's a bearish engulfing weekly chart, and it's got a, it looks like it's got a date here with $9,000. The only problem here is the weekly TTM squeeze might take some time for it to really reach the zero line. Like if you look at the technical perspective of it, the TTM squeeze, see how the the transition from the red to the yellow bar, that's that's where it changes its gradient from negative to positive. It took still about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 weeks for it to then trigger this massive squeeze on that A7. That's exactly what Tesla's doing again, but it's very far from the zero line, right? And we might have, in this case, it might not, what I'm saying here is, in this particular case, here, it took a long time. What I think is, when we look at this and this, it actually might happen, like squeeze a little harder this time because of the way that it's consolidated from January 24th to March. And then if you look at the monthly candle, then we can actually see that the 6-month moving average is around 1,000. So March could end up closing decently green for Tesla, but I think the big month that we're gonna make a lot of money on, or if we trade TGIF, is gonna be the month of April. So I think that next April monthly candle, especially if we get a nice green doji, it could actually move Tesla and retest. We could get a big monthly candle here that just goes like this, right to here. That would be a double top, filling the gap. So I don't think it's going to happen in March. And March is almost done, right? Yeah. So so this will be a little bit April 25th for Tesla, not announced yet. Yeah, not announced. Good. Thank you very much. It's awesome. It's great that everyone is sharing and throwing all this information here so we can model it a little bit with a little bit more with more data, right? It's kind of like waiting for the daily candlestick of the trading day to finish to get all that data in there. Sometimes you can get the full candle nice and thick and hard in the first 30 minutes, and then after it makes like a 4 or 5% move, what next, right? It's probably going to pull back and do a magic mic. Some bad news in, but here Tesla is definitely looking like it's going to have a pretty big April. Definitely it's going to suck if Tesla moves up to $1,000 this week. But I think if you just make a note, because Tesla made such a large move in the past 4 days, like everything else, we should wait for that doji and then do something 10 seconds into the close. So that's my plan for Tesla. And then at the end of the week, I'm going to do a TGIF for Tesla. Right now I have Roku. So Roku obviously is like the shittiest company in the world, but it doesn't mean that the strategy is bad. And I'm only thinking of this as terms of a means to an end, not an ends to a mean. People are treating Tesla as both an ends and a means to an end. Okay, so that type of philosophy is hardcore hodler. This one, Roku, is a means to an end type of trade. What that means is that I'm strictly using and abusing the pattern and the strategy and position sizing, even such that I'm not going to blow up the account and just take advantage of this trade on that strategy and the win rate and the profit factor. I've showed this many times. Roku has a very unusual strategy that is just money making, but you have to position size. See, if you can master the position sizing on Roku, I think, yeah, you will make quite a bit of money, and it would almost be the point where you're not really sweating every single move. This is a very legit strategy, especially when you mix it in with your Hikinashi candle. So Roku's got this beautiful Hikinashi candle, okay, on the daily. The last time it was green on the daily, we got the green Hikinashi candle here. Actually, let's take a look at Tesla. I didn't see the Tesla Hikinashi candle. Yeah, same thing. Okay, so Tesla, Roku, they're all showing green Hikinashi candles with A6, pretty much with everything else. But the reason why I picked Roku is because Roku did not meet its 50-day moving average objective. So I put in half risk on the strategy, and we got an A6, and we've got 2 days for this thing to move up to 20%. There is a high probability that we could, if you do not close your positions on Roku, which positions do I have? I have the 140 calls, right? 140 calls. It's not that much risk. I got about 15 contracts. No, I got more than that. Yeah, I got 15 contracts. So if Roku moves, so you think about this psychologically. I know it always sucks to lose money, but if you hold this position as per strategy from now till Tuesday, those 140 calls could move from 70 cents to $5. That's huge. Actually, it could move. Let me just double check that. And you might think I'm trying to pump it, but I'm just being realistic on the 50-day moving average, right? So I'm 145 and then A6 with the green Heikin candle. And yeah, if it moves to 146 by Tuesday, 10:30 a.m., then those contracts will be worth $4. So that's not a lot, for just putting in a half position, $750 to $1,000. Then you close them off at $4. You've effectively turned a $800 position into $6,000. So, and that's not a lot of money, right? You're not sweating. If you put in like $10,000 on Friday TGIF on Roku, you might be sweating it a little bit. But if you put in half of the designed amount and you choose not to manage it at 100%, that's totally up to the trader, right? You either take the full hit of zero, or you take the take the principal out, and that will mean you'd make 3,000 profits instead of 6 or 5. Okay, so that'd be 2,000 versus $5,000 profit. Huge difference. So this is a pretty interesting setup. 20% move in Roku is what I think is going to happen between now and actually, sorry, it's going to be worth if Roku moves 20% to the 50-day moving average, those contracts will be worth $6 actually. So that means that you risked 1 to make 9 or 8. So this is huge. This is a huge deal. And if we take a look at the gap there, the gap is at 143. So then actually they'll be 3 in the money. So they will be worth around $5.50. Okay, so you should, if you're onboarding, remember your job as an onboarder is just to try to double your account. Every other trade that I put into the trading alert, these are discretionary, right? And you really need to know how to manage your risk. I simplified it in the onboarding for the onboarders, right? So you gotta understand that. And I'll probably do a position sizing course tomorrow once I get the spreadsheet, the new spreadsheet for the options. The onboarding spreadsheet should be completed hopefully today. I just it's been busy with all these people coming in and out. Okay, so the next one, any charts that you guys want me to look at? Shopify, that thing pumped and dumped. I don't know what happened here. It's already down like 9%, but who knows what this thing is going to do. This was a crazy move. Let's see, Apple. So Apple, they all have this same type of common denominator in terms of the moving average, 166.62 on Apple. Amazon, it broke right through that 221 and then just went straight up to making a move up to that 200-day. That's a crazy move on Amazon. Totally missed out on the 21-day moving average trade. That sucks. And Baba is also making these big moves here with that wolf wave that just came out of nowhere. So there's a lot of great trade setups, and that's the dip there. That was, that's not an easy dip to buy, but after that, the FOMC Wednesday ripped everything higher. So what do? We have to just kind of trade the markets and trade in the direction that the markets are moving. Let's take a look at Nvidia. So Nvidia also busting out here pretty hardcore with that E6. So they're all breaking out here, and I think the downside is reducing in. The downside here is going to be less likely for the short term, but long term, the S&P gap will eventually fill. It's just not going to happen anytime soon, from what I see. And then Netflix has earnings, and it has a very similar chart pattern to Roku, which is trying to make a move up to the 50-day moving average. So they're all kind of, relatively speaking, Netflix and Roku is not as strong as Amazon and Tesla and Apple. And it's basically shown in the price of the chart because of the relative strength of how it moved away from the 21-day moving average in the past 3 or 4 trading sessions. So Microsoft has a wolf wave here. And yeah, so even Microsoft is showing a very bullish breakout. But keep in mind, I think when you look at this chart, the extension here from the price to the next 6-day moving is 2.26. So I would probably wait for the pullback rather than just try to trade the breakout. Because I was trading the breakout here on Thursday and Friday simply because I recognized that the VIX was dropping and causing the market to not, set up for another leg lower. It was setting up for a breakout. So I traded Netflix and Tesla, and then now with the strategy triggering on Roku, and since it's not anywhere near its 50-day moving average, I think they're still catching up for Roku and Netflix. Okay, so that's about it. I don't really have anything else to say, but I think once Microsoft makes some sort of move, maybe up to this level 315, then we probably are going to go into wave 4, and then wave 4 will probably introduce definitely that chance for it to pull back and end up becoming like a falling knife type of scenario this week. So wave 3 might end this week on Tuesday. Wave 4 will start coming in on Tuesday, Wednesday, Thursday, Friday, and then we're up to wave 5 beginning of April. And then this week we have a member, 750R member, who's been trading 20 plus years in the markets in penny stocks, US equities, options, and everything. And he's going to be sharing his trading journey. He's an American. Okay. And he's actually started an account with me a long time ago. I'm gonna ask him. I'm gonna be sending him some questions. If you have any questions about that you want to ask, direct message me those questions, and then I'll forward it to him. Okay, questions related to trading and his trading experience, right? Like, don't ask him if he's single. Don't ask him if he's married. Don't ask him, those type of questions. Ask him things like, what kind of beer do you drink after you finish trading? Something trading related, right? Of course, a divorce could be related to trading, but don't talk. Keep it set. Have some respect. Okay, you want to ask? Okay, he wants personal questions too. He wants to be on the spot. So he's going to be sharing his questions, his history and experience, and it's good to know, right? Because everyone who trades obviously has one goal in mind. It's to make money, but making money is a little bit more complicated than just making a big trade, right? There has to be consistency. You got to pay your taxes. You got to stay alive. You got to constantly be watching the markets, taking those trades. There's so many things that makes a successful trader, especially someone like himself trading for the past 20 years. Maybe he could share some of his experience, what he's gone through these market crashes. Like there's probably a lot of market crashes that happen in 20 years, right? We've gone through, since Trump up until now, I think we've gone through about, at least one major market crash. That was last year. Well, was that a market crash? I would still think it's like, because it's weird. The S&P dropped like 30%, but the NASDAQ dropped like only 14%. So I don't know if that's a market crash. So I guess we haven't really gone through just corrections. But that's scheduled for Saturday. So if you guys are interested, especially for those who have a 750R account, I'm sure you're all pretty nervous about what this system is going to do and all that stuff. But the 750R client who's going to be speaking on Saturday is probably going to help make it easier to not worry about what your next 5 years is going to look like. And he's been through it all. I think we started his account at probably one of the worst times in the markets, and he's still here. So we're going to pick his brain on Saturday and also talk about how his trading, his options trading and his penny stock trading, how he did during those times before he joined the 750R or the toss option Discord room. And it's going to be pretty interesting to hear. So and then after that, there's probably another person. She's probably a pastor. We're going to have Pastor Mary come in here, and she's going to talk about her experience. Every week or so, I'm probably going to get a lot of the members, 750R members, to kind of speak out, because why not? Once your system makes a couple $100,000, why don't you just speak out about it, right? Just come on, make $100,000 with me. Why don't you say something? Say something like, "Hey, it works," or "It doesn't work. I don't think it works, but I'm up 100,000." Say something that makes everybody think twice. But definitely, this is not an easy market. Definitely, it was not an easy market. And but yeah, we're still live. So that's scheduled for Saturday. And the next tonight, after I come back from this dinner, I'm going to post a course schedule. So usually I do courses. Let me see if I can find that course schedule here. So it kind of looks like this, right? This is a course schedule where I talk about basic concepts, right? How the ideal long setup. I probably should talk about the ET trade, because that's the market moved a lot on that ET. Entry, profit taking, TTM waves. These are the courses. This is a typical course schedule that I'm going to make available for the month of April. So it's if you take the course, you learn the concepts. Just because you take the course doesn't mean you're going to make $1 million. Okay. It took me, so this course right here, position sizing, when I started trading when I was 26 and I started trading, I didn't have any position sizing concept. So I would just put like 50% of my account in any one trade. That's it. Like if I saw the trade and I took it based on like a simple trigger, right? And I would just use 50% of my account, and I'd then blow up my account in about 2-3 weeks. So that position, this one right here really changed my life, and I started to learn this at the age of 31, and then at the age of 36, 35, that's when during that time when I was learning it at the age of 31 to 35, that's when I became pretty proficient in understanding what position sizing meant relative to my net liquid. So this is a very, very important course, but that's the concept, right? The concept, the calculation, and then you have to piece together the puzzle after you know that. So, because that's a known. When you start trading, you have your position sizing. Like if you start trading for the first time, you don't even know what position sizing is. So that would be called an unknown, or maybe unknown known, because you don't know how to position size, but you know that there's something that you need to do to figure out the allocation amount. And then when you start learning it, it becomes a known unknown, because you know about it, but you don't know how to use it. So you want to get to the point where you actually really understand it. That position sizing thing here is life-changing for me, even though it's not going to get you toward a multi-million-dollar option trade. It might, but you got to master that first, and then tie it in with your ideal long trade setup. Kind of figure out what your entry and profit taking looks like, and then use those strategies like those ETs and BLTs and stuff like that. BLT is a setup, not a strategy. And then TTM squeezes are, I think TTM squeeze can be considered as a strategy when you tie it in with the TGIF, right? Because that's the whole point of a TGIF. You need to have price squeeze. Is Roku squeezing on the 78-minute? Right? By any chance? No, that sucks. Let's see if it's squeezing on the daily. No. Let's see on the 30-minute. Yes. And then on the 2D. No. 3D. No. 4-hour. No. 146 is right there. 195. No. So it's just the 30-minute squeeze that is a setting up. So yeah, it's a setup or it's a strategy. Maybe it's a strategy. Hard to say. I would still say it's like a setup. We're in a strategy anyways because it is a TGIF. Monthly wise, the candle. Yeah, so the candle moves up to. It could be a very interesting trade here on Roku if it even moves up to the green dot here at 195. That'd be pretty crazy. We'll see what happens. I think it's worth a shot to hold the position for Roku. This is onboarding trade, so you don't want to mix your rule number 1 with position sizing. Don't mix your strategy with your other trading account. You got to keep them separate. Okay? It's like number 1 rule. Don't mix everything in one. Don't mix like all that liquor in one glass. Separate it, right? Don't do that. So that's this is actually a pretty interesting trade. I'll see what happens. Let me just check on the Thinkorswim platform to see if Roku has a 78-minute. I remember there was actually a daily wolf wave, and that's actually been just took off. So yeah, I don't see anything else that looks great on Roku at the moment. But I think we have a pretty good opportunity in April to make a good trade on Tesla on the earnings run. Okay, so that's about it. I don't have anything else to say other than just, if you have any charts that you want anyone here in the Discord room to take a look at, please let us know. But in the meantime, just trade safe. Make sure you position size. I'll have the course calendar ready for later tonight, along with the new position sizing. One of the main reasons, I'll just quickly talk about the spreadsheet. This spreadsheet here is a little complicated. Everything, I think, this is pretty straightforward. The close date, open date, the team viewer link, strategy, set up a description, right? Strategy ID, and then your contract details, all the way up to here. So all this stuff is pretty straightforward. What's not straightforward is when I close half and how the spreadsheet is updating half a close or like partial close. So that's going to be updated by me, and I'm going to make the final, complete, official version of the spreadsheet, which will be my masterpiece. This will be the final spreadsheet I ever make, and that would be a spreadsheet that would be about 15 years of my experience on how a spreadsheet should be set up ideally. And feel free to change it. Just because I make it doesn't mean it's like it's an immutable spreadsheet. You're more than happy to take control of the spreadsheet, but for me, at least, if you want to, for me, from my understanding, keeping a spreadsheet like this is pivotal in your success, and I need to really get this spreadsheet completed because it's very important. Okay, so that's about it. I don't have really anything else to say. Thank you very much for your time. This session has been recorded. I'll be on voice tomorrow morning. Have a great day.